What is up, guys? It's your boy, No Risk, No Premium, back with another episode of the Sunday Sermon. Well, good morning and happy Sunday to everybody out there. Hope you had an amazing weekend. Hope you're having an amazing Sunday thus far. Guys, for those that are new to the channel or just tuning in, the Sunday Sermon is a weekly overview of what to expect in the market. Start with any sort of catalyst, news event, Fed speakers, earnings, etc. Anything that can move the market that's market driven, catalyst driven, whatever. Then we move on to talk about the charts, what we can expect for the week, what we would want to see, possibilities of some trade ideas that we can do. So we use the Sunday sermon to get ahead on Sunday. If you're trying to get ahead on Monday or you're trying to plan your week on Monday, you're already a day behind. Maybe winners have started prepping early Sunday morning, and we're winners. All right. But guys, huge week ahead. I mean, humongous week ahead. Probably the most anticipated of Q4 thus far. Why? Well, this little event right here, FOMC meeting. For those of you that don't understand what the FOMC is or don't understand why this is a big deal, obviously inflation's out of control. The Fed has to raise rates, and we have a CPI print on Tuesday, the day before. Okay, so if Wednesday's the meeting, 2 p.m., Powell talks at 2:30 after. Okay, Tuesday, we have core CPI. All of Tuesday, that comes out 5:30 a.m. or excuse me, 8:30 a.m. Eastern, 5:30 a.m. Pacific Standard Time. Now, basically, what does that mean for tomorrow? That means if you're in a position overnight on a short weekly dated option, it's going to be probably zero or hero at that point. More than likely, this Tuesday pre-market moves very significantly. Okay, very significantly. So, look, this week, guys, it's pretty much Tuesday and then Wednesday, okay, that we'll be looking at. Now, there obviously are other, news catalysts or economic data coming out. The New York Fed puts their 1 and 5 year inflation expectation on Monday. Obviously, all of CPI on Tuesday. FOMC is Wednesday. Powell comes on at 2:30. Okay, initialist jobless claims on Thursday will still be important. Why? Well, if the Fed is only looking at inflation and they're also looking at the jobs market, it's probably important to what? Watch when there's a jobless claims, job quits, jobs added, non-farm payroll, et cetera, et cetera. Okay. Then Friday, manufacturing PMI. Okay, so pretty straightforward on the economic data. We're really just looking for Tuesday and Wednesday. So what does that mean when the market knows it has huge economic data coming up in the short term? What does it typically like to do? Well, it likes to range trade, consolidate, etc. What has it been doing? It's been doing exactly that. Basically, after falling out of the sky Monday open, all the way down here to Tuesday, Wednesday, Thursday, we just stayed in this range right here, right? Basically from 392 all the way to 398-ish, okay? And it's likely to stay in this range until at least Tuesday. So tomorrow, what's my expectation? Expectation is still what? Long 390 and more than likely short 397 if we get there, okay? But I want to just zoom out here for a second. Okay. Zoom out. Take a look. Huge downtrend line being respected, right? What is right here? 410. The 50 MA on the weekly. A lot of people have been talking about the daily 200, which we have been respecting the entire bear market, right? Anytime that we've crossed under it, we've gone up, failed it, gone up, failed it, gone up, failed it, gone up, failed it. Okay. Now we're kind of dancing around here. So to me, the only thing that's different from this touch of the trend line and this touch of the 200 MA is this. Anytime we've gone up, it's been a sharp rip up and then it's fallen right after, right? Sharp rip up, fallen right after. We get this stage 1, stage 2. Now, could we be in a stage 3? It's very possible. But the one thing that's different about this one is we've gone up, we based, went higher, dropped, and continue basing. Okay, so to me, this has more opportunity to still continue higher. So you can't ignore that. You don't just take a blind short up here. Okay, You can't ignore, right? Because what if CPI print comes in soft and everybody fucking gets long? And what if the Fed doesn't raise rates on Wednesday? Now, I'm just saying, what if? It doesn't really matter what the data says, it matters what the reaction is. If they react as buyers, you can't be short. Okay. And don't get in front of the freight train. So the only thing different is I see some consolidation up here, but we obviously see what everybody sees the head, or sorry, shoulder, head, and is this going to be a shoulder built? If we do get the shoulder built, you're going to want to look up here to 403 for the right shoulder. Okay. Now, what I think could possibly happen is a possible Ripper Magoo. How are you on maybe a softer CPI print? Maybe. And an ultimate price target would be, I want to see where this 50 MA, right? Where this 50 MA opens at. Does it come down a tad under this 410, maybe to like 408, where that would be an initial big rejection? We've seen it over here. We had it right here as well. It could try to get some people caught off sides where they rip it up, maybe poke their head above and then start to drop it. Very possible. Okay. Very possible. So the market will be full of traps and offs, trying to catch people off sides. It will happen all week. So we can't deny the 200 MA we failed. Also, this 50 MA is the purple dotted line. We failed every time going up. And you can't, I mean, you have to give some respect to this downtrend line because that is a rejection. That is a what? 20-point rejection, really, right? Trend line hit down to 390 almost. Boom. There you go. You have to respect it. Okay. You have to respect it. So one thing I'll be looking for to play out this week, most definitely here, is the head and shoulders pattern, which I'd be looking for a rip back up here to about 403 to maybe 405 area, even as high as the downtrend line. The right shoulder just has to be lower than the head for the pattern to work out. Cool. So look, this week, the range, I believe we will likely maybe get a fake out Monday morning. Try to catch some people off sides down to 389, 390. That's where I'd want to look to take a nice long right here. Okay. This would be a great trade, great R&R setup to the upside. 100%. Okay. But with Tuesday's data in the morning pre-market, it's just going to be a trade more than likely. Know if you are holding anything short dated into that into the core CPI print, that is very risky. I would tell you to, one, lighten your position, two, hedge it, or just be cash and just play the action after, which is more than likely what I'll be doing. Okay. And then I would like to take a possible short from 390, about 7 to 398. Obviously, this is where we opened on this was Tuesday right here, I believe. Yeah. Right. Or this is Monday. No, it's Tuesday. So the highest you'd want to go, I look at 397 at first for a short, 397.98. If that doesn't work out, then I'd look at 400. Okay, 400 is definitely a short in my book. That's before the data. Now, I would look to see if the data gets us above that. The data gets us above 400. Okay, you know the next day we have the FOMC. Okay, so you'll know there's going to be more range and trap trading into that as well. Okay, so you'll want to see maybe they try to get us up here into above 400 to 403 area. Would make sense. Okay, so I'm looking at to long 390 tomorrow and a possible short of 397 to 400. 400 would be a great short. Great short. Great R&R setup. I like it better than 397, but you can't ignore the previous day's high here at about 397.98. Okay, Friday's high. So, guys, this entire week, it is also OPEX week. It's triple witching, quad witching. The futures contracts change over, right? It's all of the above to have a recipe for a disaster if you are not planned, if you are not prepared, and you leave your bias at the door. Play your levels, get in, get out, rob the bank, and don't stick around to see if the fucking cops show up. Do not overstay your welcome. Get in and get out. Okay? This is not a buy and hold market. This is a smash and grab environment. So treat it as such. Okay? So real quick, guys. Just quick overview for us. Tuesday, CPI. Wednesday, FOMC. Okay? Levels I'll be looking to watch, especially Monday. I want a long 390. Okay. And I want to possibly take a short up here about 397. 400 would be better, in my opinion. Okay. If we get above there, you want a short 403 where the 200 MA is, which would also be the right shoulder playing out on the head and shoulders pattern. Okay. And then possibly if the data gets up there, you want to look at where the 50 MA on the weekly opens up, currently 410 close as of Friday. Sorry, that's the 4 hour. Okay. You want to see where this opens up at. Okay. And then mark that level on your chart. Okay. Very simple stuff, guys. I can tell you this week, guys, the disciplined trader will win. Okay. The disciplined trader will win. So be disciplined. All righty. Wake up. Map out your levels. Know if there's someone speaking. Know if there's economic data coming. Just be in the know. Okay. And you will do okay. Okay. So real quick, guys, levels. In case we break for 390. Under 390, we see 385. 50 MA will likely be there on the daily updated. Okay. 20 MA on the daily is 398. Now we'll want to see where that opens as well. You can't deny also we had a bearish cross. The 5 crossing the 20 is the indication of a possible reversal signal. Okay. But look, if we get below 390, okay, levels go like this. Below 390, 385, excuse me, 385 under 390, 385, 380, under 380, 374, 370, 363 below there. And basically the depths of hell after that. No, but in all seriousness, under 370 is hell. If we get under 380, the bear market rally is over. Losing 390 is a warning shot to bulls. It is not good. They need to spike out of that zone very quickly. If they don't, then the party is likely going to be over and sellers are in control. Remember this huge fucking gap we have from the last CPI at 381 all the way up here. I mean, really, it's up here to 385, but still huge gap. Okay, huge gap. So you want to know that if that gets filled, it's likely game over. Okay, it would have to bounce something pretty significant after that. All right, so below 390, 385, 380, 375, 370. Don't forget the gap fill at 380, 381. Okay, above 400, 403. Okay, look at 405, 408. Okay, 410, 11. And if we get above 10, 11, 410, 11, this thing's going to rocket boogie, shuggy, dougie all the way to 420. Blaze it. Okay, that's all I got, guys. Really simple this week. Okay. Know that Tuesday and Thursday, or excuse me, Tuesday and Wednesday is everything. Okay, is everything. If you're in the Wolves of Wealth community with us, you will be prepared. Okay. So, guys, that's all I got. Hope you have an amazing rest of your Sunday. Don't forget to wake up early, mark your levels, and of course, don't do anything fucking stupid. We'll see you bright and early. Peace.